Welcome back to Alpha Recap, your post-market briefing from stockalpha.ai. Markets closed for the day, and we've got a packed recap of what moved the tape. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots to unpack. Earnings, policy testimony, and a fresh wave of enterprise AI news all collided today.
So, what really stands out here is that three cross-cutting forces compressed near-term risk into a very short window.
Right. You had a concentrated earnings calendar, high-profile Fed-related testimony, and a notable corporate tech push. That combination amplifies headline sensitivity.
Let's start with the earnings calendar. The headline was that nearly 20% of the S&P 500 was scheduled to report this week.
Yeah, that tracks. When that many large names report in a tight window, idiosyncratic results can cascade. One surprise from a big company can ripple through suppliers, customers, and sector exchange-traded funds.
I mean, when you step back and look at this, it compresses the time for price discovery.
Exactly. Analysts noted that benchmarking and analyst revisions accelerate. So a single miss or beat can change how people think about an entire sector within hours.
And then there was testimony from Kevin Warsh, the president's Fed-nominee. That added a policy overlay to the week.
Right, and the market was parsing sound bites for any tilt on rate trajectory or balance sheet cues. When policy commentary lands during a concentrated earnings week, you get more volatile cross-asset moves.
So, earnings, policy, and then tech. Tell us about the Infor and Amazon Web Services partnership.
This was interesting. Infor and Amazon Web Services unveiled industry-specific agentic AI for manufacturing. Analysts framed this as a move from experimental pilots to productized vertical enterprise solutions.
Which, in plain English, means what for companies and cloud providers?
It means these agents automate specific workflows inside a factory. So instead of selling raw compute or a toolbox, cloud providers and software partners sell outcomes. That can change unit economics if customers pay for results rather than just seats or licenses.
Right. And the other thing is customers adopting that at scale could lift cloud spending per account.
Exactly. Market participants will be watching rollout metrics, any reported annual recurring revenue uplift, and measured time savings in case studies.
Quick reaction segment. Wow, okay.
Hold on, say that again?
Let's pull these threads together. Analysts were split on whether fundamentals or flows mattered more.
Yep. JP Morgan emphasized that global corporate earnings resilience was cushioning equities against geopolitical shocks. So that's a fundamentals first view.
Meanwhile, other narratives highlighted liquidity and flow-driven moves, like social media chatter and index flows.
Right. The market today is a hybrid. Fundamentals matter, but plumbing, social posts, 8K filings, index rebalances, can still move prices, especially in smaller names.
Speaking of social, the POET example popped up today. A tweet stirred chatter and price action.
The Poet episode is a reminder that meme-like flows persist. A single post can seed speculative activity in thinly traded stocks that far outstrips fundamentals for a while.
Yeah, absolutely.
And analysts keep pointing out, that's a separate risk from macro or earnings-driven repricing.
Let's talk about corporate filings. There were several Form 8Ks filed today that analysts flagged.
Several, yes. Filings covering Regulation FD disclosures, executive changes, material agreements. For example, Virgin Galactic, Encore Energy, Passage Bio, and USA Rare Earth all had Form 8Ks on April 20th. The accession numbers were included in the market notes for anyone digging into the filings.
Why do these administrative filings matter?
Because they change informational asymmetries. An 8K that discloses a material definitive agreement or unregistered equity sales can presage dilution or governance shifts, which matters for valuation and investor risk calculus.
Short reaction.
Right.
Now on analyst disagreement. There were some clear splits.
One big split was risk pricing versus fundamentals. JP Morgan was constructive, pointing to earnings resilience. Others worried that geopolitical flow risks, like the reported UAE request for a dollar swap line, could dominate near-term returns if things escalate.
And there was an asset class debate too.
Yes, one sell-side note argued a specific index fund could outpace the S&P over the next 12 months, while another bank suggested gold might outperform U.S. equities. That's a stark cross-asset disagreement that could drive big flows.
So, for different investor types, what changed today?
Tactical traders faced elevated headline risk. Tighter intraday controls and nimble positioning were favored. Long-term investors got some comfort from earnings resilience, but analysts cautioned to separate durable shifts from headline noise. Dividend and income investors were told to watch 8Ks for dilution risk. And institutional allocators needed to consider the index versus gold debate in their portfolio tilts.
Honestly, I was a bit surprised by how many angles there were.
Same. It's a reminder that a single day can have many levers, fundamentals, flows, and geopolitics all interacting.
Let's get practical. What should people monitor this week?
First, earnings prints and guidance versus consensus for that nearly 20% of the S&P reporting this week. Watch revisions to next quarter earnings per share estimates. Second, Warsh testimony soundbites for any policy tilt. Third, adoption metrics for the AWS and Infor manufacturing agents, time savings, ARR uplift, and customer case studies. Fourth, pull the Form 8Ks we mentioned to verify details on executive changes and material agreements. And finally, keep an eye on any official swap line announcements or cross-border funding spreads for geopolitical flow indicators.
Those are concrete checks.
Right, and analysts stressed, track execution metrics, not just headlines. That's critical for judging whether a product launch is an inflection or just marketing.
Quick two-line reaction.
Yeah, that matters.
A few more color points. IBM reported a first quarter beat, and Evercore ISI reiterated its rating. Analysts said that beat supports the view IBM's strategy is showing operational improvement.
But they also cautioned, forward guidance and revenue mix shifts matter. Is the business moving toward recurring software revenue, or is it still heavily services and hardware? That mix will drive sustainability.
And the AWS Infor launch. Transition from tools to industry agents changes monetization models.
Yes. If adoption scales, cloud providers could shift pricing from seat-based to value-based models. That raises the possibility of higher cloud spend per customer, which analysts will watch in subsequent quarters.
Okay, short reaction. Right. And the other thing is, the market did react to all of this in pockets.
It's almost theatrical sometimes. Earnings, testimony, product launches, all vying for attention.
Totally. Now, before we wrap, a quick strategic checklist. No investment advice, just analysis.
Differentiate transient headlines from durable shifts. For enterprise AI exposure, watch customer adoption metrics rather than press releases. Use Form 8Ks as early warning signals in small and mid-caps. And be mindful of public asset allocation debates. Those narratives can drive flows into ETFs and passive instruments.
And the risk note, very important.
This is market analysis and information only. It does not constitute a recommendation to buy, sell, or hold any security and is not personalized investment advice. Analysts note and data suggest trends. Listeners should do their own due diligence or consult a licensed advisor before making decisions.
Final takeaways.
First, earnings resiliency is a meaningful foundation for markets, but it doesn't eliminate headline-driven volatility. Second, concentrated news flow, like the nearly 20% of S&P names reporting, raises the odds of quick repricings. Third, enterprise AI commercialization is a structural tailwind, but measurable customer adoption will validate the story.
And for traders and allocators, manage intraday risks and watch asset allocation narratives that could reallocate flows between equities and other assets like gold.
Exactly. Stay disciplined about which metrics validate a thesis, not just which headlines excite it.
Thanks, that's a great summation.
My pleasure.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next market close with another Alpha recap.